Hey traders, Marcello here, founder of the Day Trading Academy, co-founder of Speed Up Trader, where you guys can come and trade our money live. Just pass a test for 120 bucks. Today we're talking about why trading stocks is horrible from a tax perspective. So if you guys are watching this video, you're probably in the market to make a little extra money day trading, right? Obviously, I think it's important to first point out, obviously, you can make a lot of money in the stock market. It's not as easy as everybody says it is, all right? So when you guys are in this business, obviously, I try to be as upfront as possible, right? I mostly teach futures for specific reasons, but what we teach obviously applies to any other market. But what I want to talk about more than anything is the taxes that come involved with that. So there's a lucrative, not lucrative, there's a beneficial tax treatment when it comes to trading futures compared to other markets. So if you guys are out there trying to learn how to trade, whether it's with stocks or Forex or futures or whatever the case may be, CFDs, it's important to kind of realize the tax ramifications of this. First thing I got to tell you guys that this is for the United States. So if you guys are residents or citizens of the US, this applies to you guys. If you guys are trading overseas, if you're British, for example, or Australian or Canadian and you're trading in the US markets, you don't have to pay taxes in the US. In your home country, you most likely would, as long as you aren't residents of your home country. All right, so the first thing I want to point out when it comes to trading is the fact that most financial vehicles, most financial assets were not created for day trading. So stocks were created to be able to not only make more money or raise more money for the company, but also for the general public can invest in the company and get dividends and benefit from the public company making money. So, a company goes public, they have an IPO, initial public offering, you invest in the company, the stock grows, you make money, you get dividends from their profits. That's what stocks were originally created for. Forex was created to have an exchange between two currencies, right? So if you have the euro against the dollar and you wanted to buy the dollar, you needed to go and exchange it somewhere, right? CFDs, a bit similar as well. So futures, especially more than anything in the US, CFDs are illegal in the US, but futures more than anything were created as a purely speculative investment, which basically means they were made so you guys can go out and day trade. This generally was, let's say the boom was in the 90s, just before I got started trading. I think I'm going on 18 years now, if I'm not mistaken, from learning and teaching and all that stuff. So if you're going to invest, if you're going to learn how to trade, right, you can make money in any market technically. Some markets might be easier than others. As I talked about in the videos, like futures, in my opinion, are much easier than other markets to trade for many reasons. I'll do a video for that in another day. But if you're going to make money trading, and again, full disclosure, you can make a lot of money, you can lose a lot of money. Obviously, if you're going to make money trading, wouldn't it be better to trade a market where you don't get charged as much taxes so you can keep more money in your pocket? I would guess yes. So to explain to you guys the beneficial tax treatment in futures, it's something called the 60-40 rule. Any asset that you buy, whether it's real estate or a financial asset, if you buy and sell it really quick, the government wants to charge you a higher tax rate. It's called a short-term capital gain. If you hold an asset for longer term, and this, if I'm not mistaken, they created, well, not only to just charge us more taxes, right, but to not promote speculative behavior. If you hold an asset for a longer period of time, whether it's real estate or financial asset, they're going to charge a long-term capital gains. So short-term capital gains are generally taxed at a higher rate or at your ordinary rate, and generally a long-term capital asset is going to be charged at a lower rate. So if you trade stocks, buy and sell, you make a profit, you always get charged the higher rate. You buy and sell Forex, you make a profit, you always get charged on the higher rate. Any market except futures is like this. And if you guys are accountants or you guys know something that I don't know, go ahead and put it in the comments. I do these videos so all of us can learn. So futures have a 60-40 rule, which basically means 60% of your gains are taxed at the lower rate, the long-term capital gains tax, and 40% is charged at the higher rate, which is the short-term capital gains tax. So just to explain to you guys the 60-40 rule. If you make a profit, 60% of your profit is going to be gained at the lower tax rate. What's the rate? That depends on how much money you make. Generally, I looked this up recently for 2018. This might change, for 2019, 2020. The short-term capital gains tax is generally your ordinary rate, or depending on the actual asset itself, it might be as low as 10 or 15%. If you are paying less already than 15%, you qualify for a 0% long-term capital gains rate. For the higher income taxpayers, the capital gains rate could save as much as 19.6% off the ordinary income rate. So this is not the reason why I teach futures. This just happens to be the way it is because, futures were originally created as a speculative investment. You literally are going to go and speculate on what the value of oil is going to go to, or gold, or indices, or whatever. And that's a great big difference with trading stocks, because obviously with stocks you're going to pay a higher rate, and there's also other things involved. I think I should include it. Let me just mention it here in the video. So if you're going to trade stocks, one of the main problems is if you're going to trade stocks, you're going to pay higher taxes if you make profits on stocks. There's also a higher minimum rate to make money. So you need a minimum of $25,000 to trade stocks as well, compared to futures. And also, if you're going to trade stocks, it's a little bit more complicated because you can't trade the same stock every day. So you got to wake up, you got to do your homework, you got to pay attention to the news, you got to read this report, et cetera, et cetera, et cetera. Whereas with futures, we simplify the process to be able to make sure that you're going to trade the same way every day. You do a very quick 1-minute pre-market analysis. And with that 1-minute pre-market analysis, you're going to be able to start trading right away in the same market every day. And then once you're done, generally on average, our traders trade about 30 minutes a day. It could be 90 minutes one day. It could be 10 minutes another, right? And after that, you just close your computer and you're done. So those are some of the major differences between trading stocks versus futures. And part of the reason why I teach on futures rather than stocks, also because of what I've been explaining to you guys as well in terms of the advantages of trading futures. You pay less taxes on a lot of the profits that you make. So if you're going to think about getting started trading, I would recommend you start with futures, because it's mainly made for futures compared to stocks, which aren't generally made for day trading. You can make money day trading obviously with stocks, but it's much better with futures. So that's what I wanted to talk in this video overall. Much simpler to day trade futures rather than stocks. Lower capital requirements. You need a minimum of $500. You guys that are watching this video, we also provide a service called Speed Up Trader, where you guys can now apply to use our money. So now you don't need to pay for a platform. You don't need to use your own money if you don't want to. You can pay $120, pass a test, and you can trade anywhere between $25,000 to $100,000. We're actually the only academy now in the world that has enough confidence in its own system where we literally want to give you our money to be able to trade with. Nobody else does that. And it's much more difficult, for example, in a market like stocks, because obviously you need a minimum of $25,000 to day trade. So let me know if you guys have any questions. We're probably going to do a live webinar for you guys on Wednesday for free, so you guys can come and kind of see how we analyze the market. You guys can always send us a question at support@thedaytradingacademy.com. Let me know if you guys have any questions. Don't forget to subscribe. And we'll see you in the next video.